Ever wondered why some traders choose to swim against the tide, betting against the prevailing market trends? Their strategy is known as contrarian trading, going against the flow, strategies for profiting by trading against the trend. Contrarian trading is an approach that challenges the conventional wisdom of following the crowd. But why would some traders deliberately go against the prevailing market trends? Stick around as we explore this fascinating concept and share some valuable strategies. Be sure to stay tuned until the conclusion of the video, as there's an exciting surprise waiting for those who stay with us until the very end. But before we get started, if you want to master the art of trading and make informed decisions that could potentially transform your financial future, you're in the right place. Hit that subscribe button and let's get into it. Chapter 1. The question of contrarian trading. Contrarian trading, as the name suggests, is all about going against the grain. It's the trading equivalent of walking down a one-way street in the opposite direction. You see, the world of trading is often dominated by a herd mentality. Most traders tend to follow the crowd, buying when others are buying and selling when others are selling. This creates trends or broad movements in the price of a security over time. But contrarian traders? They do the opposite. They buy when others are selling and sell when others are buying. Why, you ask? It's simple. They believe that the crowd is often wrong, and that by going against the crowd, they can potentially reap significant profits. Let's take a closer look. Imagine a stock that's been on a downward trend. Most traders would avoid it like the plague, right? But a contrarian trader sees an opportunity. They believe that the market has overreacted and that the stock is now undervalued, so they buy. And if they're right and the market corrects itself, they stand to make a tidy profit. But it's not all sunshine and roses. Contrarian trading is a high-risk, high-reward strategy. It requires a keen understanding of market dynamics, a strong stomach for risk, and above all, patience. Because sometimes the crowd is right, and going against the flow can lead to substantial losses. There's also the question of timing. Contrarian trading isn't about blindly going against the trend. It's about carefully identifying those moments when the market is likely to turn and striking at the right time. Get it wrong, and you could end up swimming against a very strong current. Now that we've looked at what contrarian trading is, let's dive into why some traders choose this path. Chapter 2. The appeal of contrarian trading. Contrarian trading isn't for everyone, but it does hold a certain appeal for some traders. But why? Well, the allure of contrarian trading lies in its potential to deliver high returns. It's like being a salmon swimming upstream, going against the current of the market. When the masses are buying, contrarian traders are selling and vice versa. This approach can offer opportunities to profit when markets reverse, and it can be particularly rewarding during times of market volatility. Now you might be thinking, why would anyone choose to swim against the current? Isn't it easier to go with the flow? Well, that's exactly the point. Contrarian trading is not about taking the easy route. It's about seeing opportunities where others see none. It's about challenging the status quo and finding value in areas that are overlooked or undervalued by the majority. It's important to note that contrarian trading is often favored by those who have a deep understanding of market dynamics and are comfortable with taking on more risk. These are traders who are not swayed by the frenzy of the crowd, but rather, they make their decisions based on careful analysis and their own unique perspective. They are often patient, waiting for the right moment to strike, and they are not afraid to stand alone in their convictions. However, it's not all about being different for the sake of being different. Contrarian traders are not just contrarians. They are also strategists. They understand that markets are cyclical, and they use this knowledge to their advantage. They know that when a trend has been overextended, a reversal is likely on the horizon, and when that reversal happens, they stand to profit. So while contrarian trading can seem counterintuitive, it's a strategy that can offer substantial rewards for those who are willing to go against the grain. But remember, it's not a strategy to be taken lightly. It requires the ability to think independently, a deep understanding of market dynamics, and a high tolerance for risk. So, contrarian trading can be a lucrative strategy, but it requires the right tools and a keen eye for detail. Let's look at some of the tools contrarian traders use. If you're enjoying this video so far, please leave a like and subscribe if you want to continue learning more about the world of Forex. Drop a comment below too if you have any questions regarding this video or anything else Forex related, and I'll get back to you as soon as possible. Chapter 3. Tools of the Trade. To effectively trade against the trend, traders need to have a good understanding of technical analysis and the right tools at their disposal. Let's dive into some of these tools and how they can help contrarian traders spot potential trend reversals and optimal entry points. Firstly, we have trend lines. These are lines drawn over pivot highs or under pivot lows to show the prevailing direction of price. Trend lines can be used to show both the direction and the strength of the trend. A rising trend line, for example, represents an uptrend, while a falling trend line indicates a downtrend. Contrarian traders are always on the lookout for breaks in these trend lines as they may signal potential trend reversals. Next up, support and resistance levels. These are horizontal lines that represent levels at which a lot of traders are willing to buy or sell the asset. Support levels represent a price level below which an asset rarely falls, while resistance levels represent a price level that an asset rarely exceeds. Contrarian traders use these levels to identify potential reversal points. These tools and indicators, when used effectively, can provide contrarian traders with valuable insights into market conditions and potential trend reversals. However, it's important to remember that no tool or indicator is foolproof. They should be used in conjunction with other tools and analysis techniques to increase the chances of successful trades. With the right tools and a solid understanding of technical analysis, contrarian traders can spot opportunities where others see only risk. Chapter 4. Key Takeaways. Contrarian trading is a unique approach to the markets that involves going against the grain. But what are the key points to remember? Let's take a moment to revisit the essentials. Contrarian trading, as we discussed, is a strategy that involves swimming against the current, so to speak. It's about making investment decisions that run counter to the prevailing market trends. Why would someone choose to do this? Well, it's a question of perspective. Some traders are drawn to this strategy because they believe that the majority of the market can be wrong, especially during periods of extreme sentiment. They see opportunities where others see only risk, and they're willing to go against the crowd in pursuit of potential profits. But remember, contrarian trading is not a one-size-fits-all strategy. It requires a deep understanding of market dynamics and an ability to identify when a trend is about to reverse. This is where technical analysis tools and indicators come into play. These tools can help traders identify potential market turning points and make informed decisions about when to enter or exit a trade. The potential rewards of contrarian trading can be significant. By identifying oversold or overbought conditions, contrarian traders can buy low and sell high, capitalizing on market inefficiencies. However, it's important to note that this strategy also comes with its share of risks. Market trends can persist for longer than expected, and contrarian trades can result in substantial losses if not managed properly. So what's the bottom line? Contrarian trading is a high-risk, high-reward strategy that requires a solid understanding of market dynamics, a disciplined approach to risk management, and the right set of technical analysis tools. It's not for the faint-hearted, but for those who are willing to take calculated risks. It can offer unique opportunities for profit. Contrarian trading isn't for everyone, but for those who understand the markets and aren't afraid to take calculated risks, it can be a profitable strategy. Remember, the key is to stay informed, use the right tools, and always be prepared for the unexpected. If you found this video helpful, don't forget to hit that like button, subscribe for more valuable insights, and ring the notification bell to stay updated on our latest content. And remember, the key to maximizing your gains is not just about knowing when to buy, but also when to sell. For those who stayed and watched the entire video, drop a comment with the word "free" below, and our special gift will be sent your way. Thanks for tuning in to Tradiso. Until next time, happy investing!